We're joined from Sydney by Jonathan Barratt, Chief Executive of Barratt's Bulletin.com, joining us this morning. Good to have you on the program once again, Jonathan. It's been a while. So Ben Bernanke sounding the alarm bell, saying that the U.S. recovery could be hit by the high oil prices. Are we in for even higher oil prices from here?
Susan, first of all, Ben is 100% correct. I pulled out an old chart the other day of the crude price against the Dow Jones, and it's remarkable to see how the Dow trades in step with the crude oil price. In fact, if crude prices go up, the equity markets go down. It's quite interesting, just if your viewers can look at that chart, because it typifies what Ben is actually trying to say. So if oil prices go up, yes, it's going to affect the economy, and all the powers that be now, I think, are trying to get oil prices down.
Okay, well, you know, a lot of talk trying to get the oil prices down. Did you hear what the Saudi oil minister and what he was saying recently, saying that he'll sell you the Empire State Building if the Straits of Hormuz is going to be shut, and he can pump right away 25% more oil if he wanted to.
Yeah, no, you're dead right, but it's resilient. And this is one of the frustrating things, because the price has stayed in a range between 104 and 110 for quite some time, and we haven't yet seen a break, or we haven't yet seen that geopolitical concern or that economic concern that actually shakes oil out of this range. So, in essence, the bulls and the bears are quite evenly matched, because when it gets low, we see Iran coming up. When it gets high, we see the Fed, the UK and Saudi Arabia coming out saying that they can placate any concerns on tightness in supply. So it is it's at a point where I think it'll break out pretty soon.
You think so? What's going to propel it higher?
Well, I think generally we will see more leakage coming out in the news to suggest that prices will go lower. I do think that the big story at the moment is the Chinese slowing down, the economy slowing down there, and how that'll have an effect on demand. Remember, Chinese pushed gasoline prices up the other day. So, in a result, their internal economy, as a result, probably will come under more pressure. So I think when you see the number 2 consumer slowing down and the number 1 consumer's economy just starting to slow, then that should have an effect on the demand for crude, and prices should go down. So I think economics over the day will overrule the concerns that we have in the Middle East.
Okay, so are you saying that we've hit the peak prices for the year already?
Not quite. Remember, we've still got that curveball, which I think we're all focusing on, trying to work out, what Iran's next play is. Because when you look at Iran, that to me, that situation holds the key for aggressive prices to the top side. And when you see Iran still selling oil, it's really not hurting as much, I think, as what the coalition had actually wanted. So I can see this concern, or this issue, staying with the market for quite some time, keeping prices relatively bull. Take that out of the equation, prices should be lower.
Yeah, okay, but we have that in the equation. So, Jonathan, put a number to it. I mean, what's going to be the highs and the peaks for this year?
Okay, let's take Iran out of the equation, and I think you'll see prices back to parity, 100, if not lower. The stalemate will continue, so I think prices will stay relatively steady for some time. They might have a short visit through 110, 115, but I only think it's temporary. I think we have to gauge on what the economics are doing, so I'd probably like to see prices lower rather than higher. 104, 110 is the range, 100 to me is fair value.
Okay, and that's for West Texas, right? Okay, West Texas crude, WTI there. Jonathan,
Absolutely.
Thank you so much for your time this